Hey, good morning, everybody. It's Monday, February 23rd, 2026. I, of course, am Hammer from Hammer Solutions, founder of Originator Success, Grab and Go Social, and Rate Sensei. 3 awesome products to help you to build your business in 2026 as mortgage originators. Go check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, as I broadcast to you here on Facebook and on YouTube. I probably should look into some of the other channels, but I always say it and then I don't do it. You know what it's like. I tried to connect to TikTok and it gave me a hard time. And I was like, screw it. You know how it goes. So anyway, today we've got not a lot going on this morning. It is a very calm and quiet day, unless you are in Puerto Vallarta, Mexico. Kind of made me appreciate my timing in life. I had just flown into Puerto Vallarta earlier this month. That was where I went on my Mexican vacation. Flew into Puerto Vallarta airport, even though I didn't stay in Puerto Vallarta. We went over to Punta Mita, but seeing armed cartel members taking over the airport, well, not taking over, but storming the airport, certainly made me happy that I wasn't there for that. So if you've seen those headlines, I was right there in that airport just a couple weeks ago. So, and I'm thinking to myself, would I be one of those idiots that held on to my bag, running with my bag? I don't think so. I have a luggage tag. I can replace anything in there. The only thing I probably would have grabbed was the carry-on that had my wife's medications. That's about until I could get the medicines out. Anyway, so happy to have you all here on a more wonderful note. It is a wonderful day here in Western North Carolina. Got a little bit of snow on the ground, not much, just enough. It's why I love living here. It is a very calm and wonderful winter day. Tell me about the weather in your neck of the woods. What's it like by you? I will say it is cold, though. I'm going to throw my screen up for a minute just to share with y'all as we get started. And don't worry, I'll get to the good stuff. I won't be rambling about this all day. But here is my view this morning, just out the front deck there. Just a little bit of snow. Just enough to make it look pretty. Here's the barn up here in the corner. And, so that's where we're from now. So I take my wintry walk up the driveway up to the barn this morning. And that was it. However, I will say it was freaking cold this morning. There you go. It was freaking cold. It was about 9 degrees. When I took the picture a couple minutes ago, it was 11 degrees here. So definitely chilly this morning out here. Curious, what's it like by you? Let me know in the comments. What's it like in your neck of the woods? Those of you on the West Coast can rub it in a little bit. I'm going to ignore your comment, Segeloff, because I'm not a big that kind of guy. So but anyway, thank you. All right. So if you're here this morning, say good morning. If you would like a reminder that I'm going live each morning so you don't miss the show, go ahead and sign up at hmmr.io/reminder. You can probably tell I'm a little off kilter today, still getting over a cold. So a little out of sorts, but go ahead and sign up for those text reminders so you don't miss anything. You can also sign up for free for our email lock advice, www.ratelockadvice.com. I know that some people were having trouble. They stopped receiving it. And we noticed that there had been some strange unsubscribes that were based on some of your lender systems that are automatically unsubscribing. So just so y'all know, some of you that work for lenders, the email systems automatically will unsubscribe you from things. So we were able to find a way to fix that. We were able to identify some of those. And anyway, you can also sign up for our text alerts, www.raytextalerts.com. All right, enough rambling, Hammer. I've really kind of gotten around to it. So let's go ahead. Let's just say hi to the live folks here this morning. Good morning, y'all. I noticed many of you. Alan Christian, good morning, Beefcake, and Holly Johnson. Tiffany Teal and Sean Segeloff, Debbie Richardson and Kathy Jensen, Angela Walters, Mallory Fotiadis. I'm sure my man Zane is on here. Ron Siegel, good morning, sir. Let's see who else we got here this morning. Just some of the folks. So anyway, I see all of you on here. Thank you so much for joining me. Let me go ahead. I got my captions back, so I'm excited about that. Something seemed to get fixed. So, all right, let's go ahead and get started. We'll jump into what we got going on this morning. Here's enough. We're 5 minutes in and I'm still rambling. I'm sorry, y'all. Anyway, let's take a look at the technicals. This is the heavy part. So right now, mortgage-backed securities currently up 6 basis points on the day. Isn't that fantastical? Isn't that wonderful? It's great to see them up a little bit. It means that we're going to see a little bit better pricing. So quick recap on what happened on Friday. Let me zoom into this section of the screen. Let's see if nope, got to refresh it. Give me a minute. Refresh over here. All right. So taking a look, everything in front of the yellow line here, everything in front of this dotted line, this is what happened on Friday. Pricing came out. We saw a little bit of improvement through the day. Now, if you remember, we've got all the tariff headlines on Friday. However, as much talk as what effect it was having on markets, it really had zero effect on mortgage rates. There was really no change at all. And I'm not going to dive too deep into it because it doesn't really matter in our world, but pricing came out. We were around 100.23 at the end of the day. We were around 100.30, 100.2. I mean, so you're talking a 5 basis point move for the day, just normal movement. We did not see anything that caused any concern when it came to all that talk of tariffs and all that stuff. So it was a pretty quiet day on Friday. And in fact, when we go ahead and look at last week, let me just move this over here and slide this over for a minute for you. When we look at rate sheets last week, I mean, take a look at this. We came in on the 17th after the holiday, and I mean, you've got nothing, 6.04, 6.05. It was a stagnant week for rates. Really, really quiet week for rates. Not a lot of movement. No reprices. Just such a quiet week last week for rates. And this week is likely to be very similar to the same. So rate sheets today, they should be slightly better than what we saw yesterday or on Friday, rather. If you take a look here and see, move back to yellow, mortgage-backed securities were down here when pricing came out on Friday, and now they are up here as we're sitting here today. So you got a bit of a improvement here, and it's about 10 basis points. So you're going to see slightly better pricing than that. And remember, this brings us right back to the very near the best levels that we saw after the Trump social post about the GSEs buying mortgage-backed securities and how we saw mortgage-backed security market, take that huge run up right here. And it ended that day at 101.50. And otherwise, we're right around that 101.38 level. See this 101.38? That's kind of our top of the line right here. 101.38 is a technical resistance level. That was our high point, right? And you could see that we capped it here. We hit it here. Fell from it here. Pushed back up and tested it over here, tested it again here. So, you guys can't see that one. Hold on a minute. Let me get my head out of the way. Wait, whoop. Let's do this. No, I don't like that one. Come on. Oh, I have to make this full screen. All right. Come on, get full screen. Get full screen. Okay, there you go. So we tested it up over here. So anyway, right around 101.38, you can see that candlestick right here is where we get that number. You can see that that's kind of the high point of the range. And we are very close to testing it again. Right now, we're at 100.37, which is exactly the same as 100.38, since whether you knew it or not, we actually don't measure the market in basis points. We translate it to basis points. It's actually in 30 seconds, or what we call ticks. So rate sheets today going to be slightly better, and we're really close to capping out, though. Just keep that in mind. Reprice risk on the day is low. We could see bonds drift lower. There's no economic data. There's really not anything to cover. Even if we do see them drift lower today, we could lose these 7 basis points, but it's not likely to happen fast enough that we'll see any big concern of repricing. We'd have to get down, unless you're UWM. UWM changes at like 5 basis points now. They've gotten to be such a pain in the ass. So if you've got a UWM loan, lock it. That's, that's what I would be. But other than that, you really don't have to worry about it. Is something there. There's nothing on today's economic calendar. It's a quiet day. This week, we do have a little bit going on, but really not much. You've got that Tuesday, you've got that ADP weekly report that we get now. Thursday, we got jobless claims. Friday, we've got the, producer price index, wholesale inflation. None of that's going to make a damn bit of difference this week for bonds. You're not going to see any moves on anything. So jobless claims probably the only one that's even closest to anything. Really nothing going on. As far as the Fed outlook, We'll keep an eye on that just because it does kind of play a role, but it is not the end all do all that it was in the past. Taking a look here, it is it's a given that the Fed is not going to cut rates at the meeting in March. Markets just not expecting any way, shape, or form of a possibility. And I don't think anything could happen in the first week of March to change that opinion. Waller, let's see if I can get to Waller says that the March rate call depends on the labor market. So, of course, Fed Governor Christopher Waller, one of the voting members, he says that he thinks that, if we see a weak signs of a weak labor market, if we see some pullback and revisions of the January data, then he would say, well, we need to maybe think about cutting rates by a quarter point. But he's definitely one of the minority at this point. And if we don't see weak labor market data, if the good labor market data news of January is revised away or evaporates in February, it would support my position at the FOMC's last meeting that a 25 basis point reduction in the policy rate was appropriate and that such a cut should be made at the March meeting. But if it didn't, then it's even more so. So really just there's no expectation. When you look into what's going on in April, that's down to almost nothing now, my friends. I mean, you're talking to 85% chance that rates will stay the same. When we click that little compare feature, a week ago, it was 70%. You're now talking a 15%. Look at that. I mean, and it continues to tick higher, meaning this is for the expectation from markets that rates will stay the same at the March and April meeting. And even when we look at June, look at this. A week ago, expectations that we would see a cut were over 70%. Only a 30% expectation rates would remain the same in June. Now it's 50-50. It's a coin flip. So markets have been given up quite a bit. Now, the good news is we have not seen that hurt rate sheets. And that's a lovely, lovely thing. Rate sheets have been pretty stable despite the fact that markets are not pricing in any kind of Fed rate cuts through the first half of the year. But there's no fuel in the fire, y'all, for things to go anywhere. There's no outlook. Rates really have nowhere to go to improve. They're not in danger of getting worse, but they're not really going anywhere to improve. What we could see happen is more of what we've seen before. We're again, I think we're at that kind of capping out level. You might want to lock in some loans now, and I'll throw that up on the bottom of the screen. My advice is definitely lock anything closing in the next couple of weeks. There's no reason I would be floating loans that are closing in the next couple of weeks. Rate sheets are too good right now. And there's really anything we pick up, it's going to be a surprise pickup, right? So, I mean, last week saw rates just kind of stall out. This morning, you might even see slightly better rates matching the rates that we saw right after that GSE announcement. I would be taking some of this. I'd be looking at locking some stuff up, my friends. There's really, like I said, there's no fuel in the fire. There's no fuel in the tank to drive rates to move lower. We need to see inflation dropping. We need to see labor market weakening. We need to see markets pricing in a Fed rate cut, economic weakness. All the talk of tariffs, and there is a lot of talk of tariffs, none of that is affecting mortgage rates. It's not having any effect at all. It'll have some effect on stocks for certain things, but at the end of the day, exactly what I said would happen is what happened. And it wasn't because I'm so smart or I saw the writing on the walls, because they the Trump administration said exactly what it was going to do. If the Supreme Court ruled against the use of I think it's IEEP, that particular emergency act to use for tariffs, then they were just going to use another one. And that's what they did. They fell back onto another one that gives him the ability to throw a blanket tariff on there for 150 days. I think over the weekend or this morning, he woke up and instead of the 10% that he started with right after the SCOTUS news came out, he pumped it up to 15%. And I think that gave markets a little bit of a hiccup in this morning. But even still, it doesn't matter for rate sheets. Really not helping us or hurting us that much. So let's see. It's on one of these. Here you go. Tariffs unknown. Donald Trump announced a 15% global duty following the Supreme Court decision. And then he's going to lean on to something that he has that takes longer. It's funny. There's alternative legislation that he can use. He's using one act to give him immediate ability to implement tariffs, but only for 150 days. But who's to say he can't reset it? Like, I've never read the act. I don't know. And then he's going to use another one, they say, to make the tariffs longer. And normally it takes like a year to do the research for the Trade Commission. And, they're going to be able to do it in 2 weeks because they're doing it for a reason. So anyway, all this stuff, it's not having any effect on rates, y'all. Not anything at all. So on that, let's go ahead and just have some fun chat with you guys, and then we'll wrap it up today. I was asking about the weather. Tell me about the weather in your neck of the woods. My friends up in my old neck of the woods in Jersey and New York City and Boston, all that area, getting pummeled in snow. Still a super cold. I guess Punxsutawney Phil did not lie when he said he was going to see some more. Angela Walter said, abnormally warm and too little snow in Utah. Yep, definitely moving weather patterns. When I went snowmobiling, I had a fantastic time, but we had run into that warm snap there, and thankfully we were still able to go. But Ron Siegel says it's chilly. It's going to be cold, a cold 80 degrees in Southern California. Tiffany Teal, do I have room to wait for a 45-day escrow, wait to lock? Yeah, absolutely, Tiffany, because right now there's nothing that says that rates will move higher in the next 45 days. So if you have something that like you see it down below, 30 plus days, I'd be floating just to buy yourself more time, leave yourself open. There's very little risk unless somebody wants, is close. Excuse me. Is close on debt to income ratio or wants to just lock because they're very conservative. There's no reason to lock anything there. I would lock loans closing in the next 15 days. Anything in the next couple of weeks, you want to get locked up. You don't want to be thinking about it. There's not enough chance to see improvement to, we could be capping out. So it's good to take that. Anything in the middle, 15 to 30, stuff that's closing in the middle of March, we can see where the labor data comes in first week of March and where that next inflation reading comes March 11th, I think it was. So EJ McDonald says it's a blistering 55, but it is sunny in Arizona. 85 in Scottsdale. How say 85 in Scottsdale? Where are you that it's 55? It's a blistering 85, I think you must mean. If Harry Dennis said it's 85. Rob Wilson, but we're in shorts down here in Tejas. Nicole, Utah finally got snow. Strange year. Yeah, absolutely. Good morning, Lisa. I hope you are doing well, and you've got lots of snow there in Ohio. I'm sure you do. So, all right, my friends. Well, again, where was the banana bread? Hold on. Today we celebrate National Banana Bread Day. My mother-in-law makes fantastic banana bread. Some of my favorites. So I'm not eating a ton of snacks these days, but yesterday was National Margarita Day. I guess those who celebrated probably not here this early today. Yeah. Margaritas can hit you hard. So. All right, my friend. Well, y'all take care. Have a great one. I'll see you tomorrow. And tomorrow is more of the same. Not going to be much going on. Again, it's going to be a quiet week. It's got a very calm week, very quiet week. Not much we have to worry about. So hopefully you'll join me just because it's fun. And I'll see you then. Hopefully I'll feel just a little bit better than I do today. So I'm getting there, but I'm not there yet. I don't get sick often. And I'm not a man flu guy, but I'm definitely off my game. So, all right, my friends, I'll see you later. Have a fantastic one. Bye-bye. Oh,